Ethereum's big upgrade, aka the merge, will be one of the biggest events in crypto this year, and this is when Ethereum will transition from proof of work to proof of stake. Recently, the Ethereum developers simulated the merge in the testing environment, and the good news is that everything went smoothly, and so in testing, Ethereum is officially proof of stake. Now, this means they are only a few months away of taking the whole thing live, earliest probably being around June. Now, after the merge, Ethereum will be getting some great benefits, and one of the big ones being the triple halving. And this was named after the Bitcoin halving events that happen every 4 years. So, what is this triple halving? How does it impact price? And what are the other juicy benefits that we'll be getting from the merge? Well, that is what this video is all about. And so we'll be looking at what is the triple halving event, then the news that the Ethereum staking yield is set to double, maybe even triple. So for all the people who thought Ethereum's price might crash when everyone unstakes, this may not be true. And then we'll finish with an update on Ethereum's supply and demand dynamics, as the fundamentals just keep getting better and better. As always, if you do enjoy anything in the video, then drop a like, always appreciated. Okay, so you may have heard on the grapevine that Ethereum will be going through a triple halving event. So what exactly is it and how will it impact price? Well, ready? Let's do this. So here we have a Bitcoin price chart, and this is the stock to flow model. And this is probably the easiest way to explain the triple halving event, as it's based on Bitcoin's 4-year cycle. As every 4 years, Bitcoin goes through a halving event. And then essentially what happens is that in each cycle, the miners get half the amount of Bitcoin each time. And this means that the new Bitcoin coming into circulation also halves. So this is the issuance rate or the inflation rate. And in this cycle here, new miners were getting a 50 Bitcoin reward. After this halving event, it then gets halved to 25. So in this period, it was 25. Halving event, then it was 12.5. Halving event, and right now the Bitcoin reward is 6.25. And each time, half the amount of Bitcoin is coming into circulation, working the way up to the 21 million max supply. So essentially, there's a 50% reduction on each halving event. Now, when Ethereum goes to proof of stake, the issuance rate or the inflation rate will be reducing by 90%, which is the equivalent of 3 halving events. Hence the name the triple halving. And then we can only speculate on what is going to happen to the actual price, but let's take a look at what happens to Bitcoin after a halving event. So you can see the halving event here, obviously followed by a mega rally, halving event here, followed by a mega rally, halving event here, followed by another mega rally. So if this is what happens after a 50% reduction, it's quite exciting to think what could happen to Ethereum once the merge goes through. And that is the triple halving. Now, add to that, and Ethereum's staking yield could also double. So this website is Lido, and it's where you can stake for Ethereum 2.0. So obviously, as Ethereum moves to proof of stake, you can then stake your ETH. And people are already locking their ETH away. In fact, this has got over 8 billion, and they're currently getting about a 4% yield. And are people taking up this offer? Well, check this out. This is how much money is getting stacked away into this contract to earn yield on their Ethereum. And it's just surpassed 10 million ETH. Now, there's a big concern that when Ethereum 2.0 goes live after the merge, there'll be a whole bunch of people selling their ETH, which could cause a price crash. But there's now 2 reasons why I don't think this is going to happen. Firstly, it's actually in the smart contract that everybody can't unload their Ethereum at once. It must be done in stages, so that alone could stop the crash. But secondly, Ethereum's yield is actually going to change. Check this out. The Ethereum staking yield is set to double post-merge, says Coinbase. And in the article, the current rewards for Ethereum is around this 4% mark, maybe 5%, and Coinbase told its clients that the estimated yield on staking could go towards 9 to 12%. So it could be doubling, maybe even triple. And how are they able to do that? Well, the increase in staking yield will be a direct result of the incorporation of the transaction fees that are currently paid to the miners. So there is another huge incentive for people not to unload their ETH. And what is happening right now? In fact, the opposite is happening. Look what's happened in March. The amount of money being locked away in Ethereum 2.0 staking is accelerating. And this was data put together by ARK Invest. So I would say it seems unlikely there'll be a price crash. And then what's going on in the background when it comes to supply and demand, it just keeps getting better and better. So this is the percentage of Ethereum that is being locked away in smart contracts, so the supply. And as you can see over the last year, it's just going up and up and up. Now almost 27% of Ethereum locked away in smart contracts, reducing supply. Then we have the balance on exchanges, and typically people will move Ethereum onto exchanges when they want to sell, and they'll move it off the exchange when they want to hodl or stick it into smart contracts. So as you can see, there's also a decrease as more and more people take their Ethereum off exchanges. And then this is the overall network, so the total number of addresses for Ethereum. And again, when it comes to demand, over the last year, it's adding tens of millions of people every single month, and it doesn't look like it's slowing down. So as the price here has been consolidating and going more sideways, there's still been millions of more users being added to the Ethereum network. And to finish up with a nice little infographic here, and this has to do with the energy consumption per transaction, and it's comparing Ethereum with Bitcoin. So the tallest building in the world is the Burj Khalifa, and this is how much energy is being expended per transaction by Bitcoin. Now, currently with Ethereum proof of work mining, it's the equivalent of the Leaning Tower of Pisa in Italy. And when Ethereum proof of stake goes live, the energy consumption per transaction will be the equivalent of a screw. So somewhere down here. So this is a great visual of what's going to happen with energy. And obviously, there's a huge trend with ESG and the environment, and so large institutions and even governments really care about energy conservation. So, as you can see, it's all getting pretty exciting for Ethereum. And you saw what happened to Bitcoin's price following a normal halving event where the issuance rate is cut by 50%, and Ethereum's inflation rate will be dropping by 90%, which is the equivalent of 3 Bitcoin halving events. Not only that, but the staking yield that people get for staking their Ethereum looks like it could be doubling or tripling from where it is today. And this just means there's a massive incentive for people not to unlock their Ethereum and just dump it on the market, potentially causing a crash. And in fact, the opposite is happening already, as deposits into the contract are actually rapidly increasing. And the supply and demand dynamics for Ethereum keep improving, as the percentage of Ethereum locked away on smart contracts keeps increasing, then the ETH on exchanges keeps decreasing, and the overall network keeps adding millions of users every single month. And finally, you saw the energy output per transaction when compared to Bitcoin. And it was the difference between a screw and the tallest building in the world, the Burj Khalifa. And this is also another a big benefit when it comes to the large institutions and governments. So there you are, guys. Hope you enjoyed. Are you also looking forward to the merge? Let me know below. But for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does. If you haven't yet subscribed, click below and join us. Got some great videos coming up that you don't want to miss. Okay, cheers guys. Thanks for watching, and I'll see you in the next video. Bye for now.